Everyone keeps asking me what stocks they should buy right now. But the truth is, most people are looking at it in the wrong way. Because while the market is shaky and people are scared, there are a few stocks quietly setting up for potential big moves. I'm not saying I'm buying all of these today, but if I had fresh capital, these are the 5 stocks I'd be looking at immediately. So let's break them down. If you want more breakdowns and videos where we talk more about stocks like the ones I'm covering, please comment below what it is you'd like to see in future upcoming videos, and please hit the like and subscribe button, as I do appreciate all the comments and the support that come my way. Now, first and foremost, the first stock that we're going to be covering today is none other than Castellum CTM. Now, a quick recap on Castellum CTM, as we do see here that Claude has bullish expectations for the company over the next year. They have bullish projections over the next year. A quick recap is that they are a micro cap government contractor in the cybersecurity defense market. They're in the defense market, and they mainly focus on cybersecurity, and they do utilize artificial intelligence with their programs and with the products that they use. Their revenue growth has increased 15% year over year, because if you look at the fiscal year 2025, their revenue was at $52.9 million compared to fiscal year of 2024 at $44.8 million. Now, they've had a massive improvement in net losses, and their net loss has improved over $7.6 million year over year, and their debt has basically been eliminated. And we cannot forget about the big backlog, over $216 million, giving them a 4.5-year runway. And if we do look at the price action, we do see here that they have been doing some good things in the stock. Overall, you do see here that they bottom out currently at the 48-cent level and had a sharp upward reversal. And we do actually see on the day time frame chart some higher low formations forming on the day time frame chart right here, as we do see that there is a level of support around the 63 to 64 cent level. Now, this stock absolutely is still on the radar, because as my most loyal fans know that keep showing up day in and day out every time I post on this company, this stock is not covered that well, as I'm the only YouTuber at the moment that does have the belief and the conviction I do in this company and covers it on YouTube. If you look up YouTube Castellum CTM, you'll see me and Will Rich. That's all you'll really see, and a few other YouTubers. Now, even though I do have long-term bullish expectations for the stock, you can't forget about the risks that are at play. First off, it still is a penny stock. So even though I don't anticipate this happening anytime soon, it still is a possibility that they could get a notice of delisting if they don't meet the expectations on the New York Stock Exchange. And they do have a history of dilution. And as we do know, there has been massive insider selling, especially when Jay, the former chairman of the board, I believe, Jay Wright, when he retired and he left, and he instantly started selling a good amount of his shares. And overall, there's been other people in the board of directors that have been selling their shares as well. And we do know that some not institutional investors, but investors that were heavy-handed and had bigger positions and bigger amounts of shares in the company have been selling a pretty decent amount. So that is still a fact, and that is what has happened within the previous months for the stock. And as we do know, as I mentioned, I'm the only one that covers this stock. The biggest concern that is commented in this stock in the comment section, well, not even in the comment section, but overall in other communities on Reddit, and especially in the Discord community that I am personally involved in, PR is the biggest issue with this company, as there's no eyes on the stock. I'm doing the best that I can, so anybody that does see this video and views it, please feel free to share it, hit the like and subscribe button, as I do everything I can to push the stock out as much as possible. Again, we don't do pump and dumps, and we don't hype up stocks just because, but I personally do have long-term convictions and beliefs in the company. But I do want you guys to be aware that if they do execute and awareness increases, this is the type of small cap that can move this small cap company with any type of execution, acquisitions, or any more contracts that they do acquire. A small cap company like this, any good news could not instantly, but could act as a catalyst to make the stock go parabolic and return to the dollar range, or even go around the all-time highs, which currently at the moment is about $2.83. Now, the second stock that we're going to be covering is none other than LAES. Funny story, I was actually speaking to one of the members in my InvestQ community. We were talking about SEALSQ, and funny story is I'm kind of dumb. I realized I'm dumb after that meeting, because he told me that the reason that LAES has that ticker is because it's SEAL spelled backwards. I can't believe I didn't notice that until he told me yesterday. So yeah, I'm kind of stupid. But anyways, this one is even more controversial than Castellum CTM, in my opinion. The cybersecurity and a quick breakdown in the stock itself is that it's a cybersecurity and quantum cybersecurity. They have cybersecurity and quantum resistant tech. Their 2025 revenue is projected to grow as much as 59%, of anywhere from 59 to 82%. They're moving towards sampling and mass production. They're moving towards mass production for the year of 2026. Now, the thing about this company, when we talked about Castellum CTM, they're seeing growth in the financials. And the big reason that a lot of people do not have hope, not hopium, but they do have a bullish thesis for that stock, is because they're seeing actual execution with organic growth, with revenue growing, their backlog, their debt being reduced. All those things have happened and are already happening and are continuing to happen and continue to grow. It's not the same case when it comes to SEALSQ. It's not based on the performance, especially the financial performance of what's going on with the company right now. It's more of what this company could become in a longer time frame. Now, more risks related to this stock is they also do have dilution concerns. Execution definitely needs to show up in the financials, and it is a possibility that they could be spread thin. And I'm not a fan of investing in companies that are spread thin, but I do have my personal reasons as to why, because I do own shares of Castellum CTM, and I don't think they're spread thin to the point to where it makes me want to sell out compared to another company that I did sell out about a year ago, which is Cooler. So I just want to point all that out. Now, the third stock that I want to give you a quick rundown on and what I would buy. Now, I want to make this very clear. This is not financial advice. Do your own due diligence and make your own decisions with your portfolio. I'm just telling you at stocks that are on my watch list and on my radar that I personally take into consideration. And the third one we're talking about is D-Wave, ticker symbol QBTS. Let's talk about a higher risk, higher reward play, and one that's already had pretty good price action and has surged tremendously from the time that I first purchased it, within the $4 to $7 range, and has gone all the way to the all-time highs of $46.75. Now, a quick breakdown on this stock is it's quantum computing. They're exposed to the high, not high, well, I mean, it's going to become higher and higher demand, but the very hyped quantum computing market. They're one of the big dogs in the space, and they do have strong momentum cycles. Retail and institutional interest is tremendously growing in the quantum computing space as a whole, and within QBTS as well. Now, it's the same thing, pretty similar to SEALSQ as well, not LAES from the financial perspective. It's more of a future bet and not about what it is today, but what it could become. And if they do continue to position themselves in a way that they benefit from all of the funding that will go into quantum computing, the services that they offer, the fact that they're the first commercial quantum computing company, and the fact that they are positioned in a way where they're the only ones that do annealing. So they're offering a service that the other quantum computing companies do not offer. So they're trying to position themselves in a way to where if you want the type of service that QBTS offers, they're going to be one of the only ones that pretty much do it. And they've been here for a while. They got skin in the game, and they continue to do what they got to do to give the stock PR. And hopefully we do see that there's going to be good reflections in the stock in the long term, and it does show up in the financials and in the stock price action. And speaking of the price action, we do have some pretty parabolic activity going on. High spike in volume, as you see here. We were trading at around $12.75 at these recent lows, and we've gone all the way up to $21.04. So pretty interesting. I know a lot of people that have been trading QBTS probably are happy as of the recent price activity if you did long the company. So good for you. And what this also does tie into is the fact that you do see here that this stock is very volatile. It's not a fully proven business model yet. And they still do need the results and the financials to improve in their quarterlies and in their annual reports. So this is the type of stock that moves fast when sentiment shifts. And speaking of when the sentiment shifts, again, this was the first company I ever invested in. I was involved in QBTS when it was around the lows in this range right here in the $4 to $7 range. I bought it in around $5.50 to $6. And then I was fortunate enough to be able to experience that one press release they had, that conference that they had. There was something in relation to quantum computing around this time in March where I was like, oh, wow, this is a very volatile stock. And they spiked down. I did not sell anything at all. And then when they had that one really good quarterly, it spiked up all the way to what used to be no man's territory, newfound land. And it was all-time highs in the $20 range. So it's a very volatile stock. And it does show you how easily this thing can go to the upside when the sentiment shifts for the company, for QBTS. Fourth company we're going to be going over, guys, is none other than a very talked about and hyped stock in BBAI. Now, this one, again, as I mentioned, a lot of people already know about this stock. It's an AI and government contracting company. They're artificial intelligence and their government contractors. They deal with that, and it's a strong narrative stock. You hear a lot of things about how they position themselves very well in all the airports, and they had real market usage, real world usage with the products they were offering in the airports. They gained partnerships, with the NFL team, the Chiefs. It used to be the Redskins. I'm not sure what their names are now. I'm sorry, I forgot their names, but it used to be named the Redskins. And the controversy that happened, they changed the team name. It's in Washington, and they gain partnerships there. They gain more contracts, and they have people in the board of directors that are well connected within the military. So they do have a lot of bullish and positive data points that people look at the stock and think, okay, there is a strong narrative here, and this does have potential to continue to go to the upside eventually. Now, it has shown explosive runs before, as we do know. They've gone to the $10 range. BBAI, it's been here at $5. They had their IPO and they sold off in the $5 range. They've gone all the way to $16, and then as of recently, especially since they for quite some time were in the $1 to $2 range, and then they had a good run all the way to the $10.36 highs, and they shot back down, and we're currently at $3.79. So it is a very, very, very volatile stock. Now, this moves more on sentiment, kind of like the way that QBTS does. It moves more on the sentiment than the fundamentals do. And what you do have to understand is the risk for this company is there's a valuation disconnect, because shout out to Parkev Tadavosian. He's very big on covering stocks and going over the valuations of a company, the PEG, all the different ratios that people that are that analyze stocks go over, and they do the numbers. He's very big on that, and according to his calculations, this thing should be at around like $1.50 a share, something like that. So the problem with this company is, and even though I have come to learn that the performance of a company and the valuation is not the only thing that moves a stock to the upside. Market sentiment and the psychology and the perception of what the value of the stock should be amongst institutional and retail investors also plays a role. Behavioral investing is a thing. And the thing about it, though, is it could be problematic, because if you do have a stock that lots of people do believe should be valued higher, but the valuations are having a disconnect on what it actually is worth, that could be a problem. And also, Another risk that we all know is that they're inconsistent with execution in their quarterlies. They miss quarterlies sometimes. They had a big miss a few quarters ago, and then they have a decent quarterly. Never usually outstanding quarterlies with their revenue, but it's either okay, a small miss, or a big miss. And they did have some positive news showing that they are expanding globally, but the revenue was a big disappointment, and they did beat the EPS. I can't remember the specific number, but it was an earnings beat, but the revenue was still pretty, it wasn't what people would have liked to have seen it be. So in closing with BBAI, I just want to say that when AI heats up again, and this is one of the first names that runs, not Castellum and QBTS, yeah, definitely not LAES, but this is one of the ones that when people think about AI and defense and, things related to airports, TSA, all those things, people think about BBAI. Now, the last one that we're going to be covering today, last but not least, is SOFI. Now, as we do know, SOFI is kind of a monster when it comes to continuing to increase their revenue and scale the revenue quarter over quarter and year over year. And they have been doing jobs to be in the profitable range when it comes to company and the financials in their annual reports. Now, this company is, compared to the other ones I covered, especially compared to all of them, like, I don't think you can necessarily put CTM in the same category as being unstable. It is cheaper and it's at a penny stock, but financially it is growing compared to QBTS, BBAI, and SEALSQ. Not saying that they're losers and they're never ever going to go anywhere. I'm just saying from a financial perspective, it's not as stable as Castellum CTM or SOFI, because a breakdown with this stock is it's a fintech digital banking app. They have strong user growth, and they're ranked number one. They're ranked the number one bank in the United States of America according to Forbes. Now, this gives you exposure to growth, but with a more established base. It's a slower mover compared to the small cap stocks, you don't really see the type of volatility that you get in something like BBAI, or like, there's a market sentiment shift and then all of a sudden you see it go from $5 to $20. You don't really see that with SOFI. It is more stable and slow moving, but the risks that come with it, sorry, my ring light's starting to go out a little bit, but the risks that come with this stock as a whole is it's a slower mover compared to small cap stocks. So if you are looking for those big volatile swings, SOFI might not necessarily be the play for you. And there still is a decent amount of sensitivity when it comes to the macroeconomics. So I just want to point that out there when it does come to the risks. And I would say that because when I posted a video talking about how I put $3,000 into SOFI Bank, I did mention that, and some people were saying I'm crazy. And the first thing they said is, I don't know why you would put money into this company, because it's not really growing, and it is growing, but it's not having volatile swings that could give you profits today. Not everything is about day trading or even swing trading or position trading. Some of it generally is for the long haul. And if you are looking to become for long-term investments, I would say that SOFI is a good play for you and your portfolio if that's what you're looking for. So, a quick question, out of all these stocks, I do want to know what it is that you are watching right now. So please let me know in the comments below what it is you're watching. And these are the 5 stocks that I'd be watching closely right now if I had if I had the choice of what people would ask me on the types of companies or the companies I'd be looking at. If I had to choose 5, this would be my personal 5 companies that I would be looking at. Some are higher risk, some are more stable, but all of them have something going for them in this market. And the key is timing and execution, not just picking the stock. So guys, InvestQ out. Happy to do this video. Comment below what you want to see in future upcoming videos. Stay safe. Keep making good decisions with your long-term and long-term portfolios and your short-term brokerage accounts. And I'll see you all in the next video.